Guys, this is Rudy coming at you live from Palm Beach in Florida. What we're going to do this evening is take a look at some of my highest dividend paying stocks. They're mostly energy stocks. I picked them because they are sort of similar. And these stocks or equities are generally in my account because they pay me high dividends. So it's kind of like a high dividend yielding savings account. Today is May the 15th, so we're halfway through May. And of course, over the past few days or so, the energy stocks have been under a little bit of downward pressure. But one of the reasons why I hold these high dividend paying stocks is because they pay me a high dividend, so it gives me a bit of a hedge for when the market goes down. What I'm going to show you is a side-by-side comparison of my 5 highest yielding energy stocks. And then I'll dive into each of them very briefly, just for a couple of slides on each one to show you sort of why they are in my account and why I hold them. So 5 stocks to compare. And what I'm doing here is I have put them in alphabetical order. So down here at the bottom of the screen, you can see Alliance Resource Partners, Limited Partnership. Blackstone Minerals is another partnership. Enbridge is an equity you could just buy on the exchange. You can buy it either on the Canadian exchange or the US exchange, depending on where you are domiciled. Energy Transfer is another limited partnership. And Petrobras, of course, is the Brazilian super major. And I'm throwing that one in as a wild card because who knows what Petrobras brings on a day-to-day basis, right? So just this morning early when I woke up, I saw the news that Lula, the communist president in Brazil, had fired Prates, who was the CEO of Petrobras, and appointed Magda, who's one of his sidekicks. And now we'll have to see what happens next because as a result of that news report, Petrobras took a little bit of a dive today and it tumbled, which in really, if you think about it, just makes my dividend yield even higher because if the stock price is lower and the dividend is consistent, that means my dividend percentage yield is higher. But you never know with Petrobras, right? So living on the edge. So in terms of the differences between them, firstly, there's only one of them, Alliance Resource Limited Partners, that trades on the NASDAQ. NASDAQ is usually a tech-heavy exchange. And as an index, most of the tech stocks are on NASDAQ. And I suppose nowadays with Alliance Resource Partners mining Bitcoin, they're as much a coal company as what they are a tech company. The other 4 all trade on the New York Stock Exchange, the exception there being Petrobras, which is an ADR. So right at the bottom on the right-hand corner, ADR is an American Depository Receipt. If you're an American tax person, you're not buying Petrobras shares, you're actually buying ADRs. It's like a coupon that has, in this case, equal value to the shares that are traded elsewhere, in this case, specifically on the Brazilian exchange. The industries are slightly different. So I mentioned Alliance Resource Partners is coal, but they're also mining Bitcoin. So they generate a little bit of cash, just a few $1 million. What's a few $1 million between friends on mining Bitcoin? EMP, so Energy and Production Master Limited Partnership. Blackstone also owns a variety of different royalty income streams. Oil production and pipeline, and right next to it, oil gas production pipeline, MLP. So production and pipeline for Enbridge is most of what they do, production, oil production and pipelines. They also are the natural gas utility for the province of Ontario. Energy Transfer is a major limited partnership. Gas production pipeline. They also own Sunoco, which is retail. And of course, Petrobras is a super major emerging markets because it's headquartered in Brazil. Integrated because they do a little bit of everything. From a technicals point of view, for you technical gurus out there, so 20-day raw stochastic, we're always looking here to see if any of them are trading above 80%. None of them are. So they all are based on the 20-day raw stochastic, sort of a buy, right? So the splits there being 80% completely overbought and less than 20% completely oversold. We don't have any of those there. Enbridge is probably the one that's the highest in terms of people holding it in their accounts right now, but not at all any of these overbought or oversold at all. In fact, they're all potential pickups based on the 20-day raw stochastic. A couple of variances here. So Blackstone, everybody says sell, and Enbridge, everybody says buy. If all the analysts say buy, I will probably say hold or sell. And if all the analysts say sell, then I would probably say maybe I should look at adding to this one or maybe even opening a position. I'm not only a contrarian from that point of view, but the analysts are always looking in the rearview mirror, where my focus is on what is going to happen in the future, subject to whatever it is, the business that they are in. The ratios, again, from a more sort of technical point of view, the earnings per share or price per earnings, sorry, not earnings per share, the price earnings ratio, PE, The highest one, so the most sort of expensive one in theory, would be Enbridge, about 18. So it's a little high on the high side, but Enbridge has been in my account for a long, long time, and I hold it mainly as a high yielding savings account deposit. It's been sitting there paying me dividends quarter after quarter. I just benefit from the compounding on that. A couple of them are super cheap, so Alliance Resource Partners and Petrobras, with a PE ratio of only around 4 or 5. That is way, way below the average in the market today. And even these two, Blackstone at 10 and Energy Partner Transfers at 12.75, are relatively cheap. What I'm doing here is a little bit of math, sort of back of the envelope math. I'm taking the market cap, all the outstanding shares multiplied by the share price, divided by the annual sales. So the market cap, so using Alliance Resource as an example here on the far left-hand side, has a market cap of 2.8 billion and annual sales of 2.566 billion. So it's almost 1-to-1. So 100% would be 1-to-1. So it's there or thereabouts. Petrobras is pretty much the same, $102 billion in annual sales, $111 billion in market cap. So sort of 1-to-1. The outliers here, Blackstone Minerals, interesting company. It's generating, relatively speaking, only $600 million in sales, but it has a market cap of 3.2 billion, which means it might be a little bit overvalued based on this particular benchmark that I'm using here. Enbridge, on the other hand, a little bit narrower, 32 billion in sales, $80 billion in market cap. But how's this outlier here? Energy Transfer is generating over $78 billion a year in annual sales, and it has a market cap of only $53 billion. So there's a huge delta here, which is very favorable, which makes it look as if the market cap for Energy Transfer is very low, which also indicates to us that the share price might be a little lower than where it should be in terms of where it's currently trading. If you look at them on a graph, now this graph will look a little bit different because I took it a couple of days ago, and Petrobras took a little nosedive today, about 6-7%. So over the past year or so, this would now be down to 36, 37%. But in general, over the past 1 year period, we have these stocks looking pretty good. Even the laggards at the bottom here, in terms of my comment about it being a high-yielding savings account, Blackstone Minerals and Enbridge, sort of near zero or thereabouts, plus a very high dividend to kind of provide a hedge. So when they pull back and they go negative and you still earn a great dividend, you are actually still in the money. So in practice, even though two of these are negative, I have not lost money on any of them simply because of the high dividend yield. I'm going to talk more about the dividends in just a minute. The other two, so Energy Transfer has been a good performer, 23%, plus in addition to that, it pays a dividend of over 8%. And of course, Petrobras, the dividend is erratic, but pretty good. Alliance Resource Partners up about 20%, plus pays dividend of nearly 10. So good performers over the past 1 year period. A quick look just at each one of them, and specifically focusing on the dividends, which I'm going to get to in just a second. Alliance Resource Partners, it's a limited partnership, so I understand and appreciate that not everyone can hold this in their portfolio, and some people are just too nervous to hold it in their portfolio because of all the extra work required at tax reporting time. You can buy it for about $23 per share. It's got a PE ratio around 5. It's super cheap. The next dividend payday was today. That's May the 15th. So on a day like today, when Petrobras takes a hit and it goes down 6%, I also get a nice cash injection from Alliance Resource Partners because the dividend was paid today. And because the dividend is so high, it kind of offsets the loss I took on Petrobras for today. If you look at the 52-week range, the low is 17, the high is 24. So it's kind of edging up towards a 52-week high. Over the past year, this is a 1 year period on this graph, you can see it's had ups and downs, which is not unusual. I mean, the energy stocks are going up and down pretty much all the time anyway. Historical earnings for the people who like the rear view mirror image, you can see a couple of beats and a couple of misses. So it is up and down, this particular stock. The consensus estimate for Q1 2024 is 93 cents. The revenue that it's generating is 2.56 billion. And the forward PE, even though the PE is already low, the forward PE is 5.48, which is relatively low, showing you that Alliance Resource Partners is cheap at the current price. The dividends, as I said, are paid today. It's paying a dividend of 70 cents. So that's per quarter. So on an annualized basis, it's $2.80. And based on the current stock price, it's yielding about 12%. And that's one of the reasons why Alliance Resource Partners is in my portfolio. What about Blackstone? So Blackstone has been struggling a bit. If you look at the graph here on the right-hand side, it's mostly down rather than up. You can buy it for about $16 at a PE ratio of only 10, pays a dividend of nearly 10. And if you look at the 52-week range, it's sort of right near the bottom. Its 52-week low is $15, and it's currently trading at $15.90. I don't expect to see too much movement on the price here. In fact, if it trades within this range, I'll be relatively happy just socking away the dividend that it pays me. Once again, if you look at the historical earnings, you have more misses than beats, which is one of the reasons why the stock is under so much pressure. Had a nice beat on the previous quarter and a miss on the last one. 27 cents non-GAAP. That's the consensus estimate is 35 cents. So it's not performing that well in terms of what the market is expecting of it. It's generating approximately $523 million on a trailing 12-month basis. And we have a forward PE of almost the same as its price earnings ratio. It's around 10 and a bit. So it's a buy at the current price. And you may want to put this on your watch list if you don't have it in your portfolio at this time. So the next payday for people like me who are long in Blackstone Minerals is coming up in 2 days from now, May the 17th. It's going to pay me 38 cents per share or per unit. And that is currently yielding approximately 9.55. So I'm getting a dividend of around 10%, which provides me with a very comfortable hedge against the market performance of Blackstone Minerals, which is down about 3% of the past 1 year. The next one, Enbridge, I've had in my account for a very, very long time. In fact, I have it in several accounts. You'll see a little American flag there at the top left. I have Enbridge in my US accounts, and I have Enbridge in my Canadian accounts. So I have a fairly large position in Enbridge overall. We also have it in some of our client accounts, mainly because of the dividend. The PE ratio is slightly on the high side today. So even though the price is only $37, which is relatively low in terms of where Enbridge perhaps could be, the PE ratio of 19 is a little bit rich right now. If you look at the 52-week range, it's come off a low of 31, and now it's trading up at $37, which is just shy of its 52-week high of 38.73. The graph, once again, has been ups and downs all year. So you never know. Once again, with the energy stocks, and we can see it during the historical earnings as well. Beat, miss, beat. Looking at the consensus estimate for Q1, 61 cents. We have revenue of $31 billion on a trailing 12-month basis and a forward PE of 17.55, which is just lower than the current price earnings ratio. So if you want to add Enbridge to your watch list, you could probably put it into your watch list. And if it pulls back a little bit from its current price of around $38, you can snag yourself some Enbridge if you want it in a savings account and then just hold it, right? Enbridge is never going to go to $300. Well, I shouldn't say never, but not in the near future anyway. So it's not like you're going to get a 10x on it. But as I said, these are savings account holdings because they pay such a nice, rich, juicy dividend. So dividend day, next payday for me comes up on June the 1st. The ex-dividend date was May 14th. So that's important too. If you want to buy dividend stocks, you may want to get in just before the ex-dividend date. You have to hold the stock in this particular example on May the 13th. It has to be long in your account before you can actually earn the quarterly dividend. And it's currently paying out a dividend rate of $2.68 on an annualized basis, which is yielding over 7%. And the next dividend is 67 cents, which will be paid on June 1 for every share. Energy Transfer has been a fantastic performer over the past few years or so. Once again, thanks to Bulldogs for that one. The current price around $16. PE ratio of 14. You could probably snag some right now at this price of around $16. Or otherwise, once again, you could add it to your watch list. If you look at the 52-week range, it's come off a low of $12.31 and the high is $16.40. So it's only slightly behind its low price. But look at the graph here on the right-hand side. It's been up, mostly up for the past year. And except for one little down bite there, everything has been good. And that downturn on the graph there is as a result of these two quarterly back-to-back misses before it beat and then missed again, right? So up and down once again. But the stock's performance has been pretty good. Consensus estimate for Q1 2024, 38 cents. Revenue, $81 billion. Forward PE is only 10 compared to the PE ratio currently of 14.54. And the price to earnings growth ratio, which is as important, is almost 1. This one is a buy at this price. And it's one of these that you can just buy and hold. Even if the price pulls back, you are socking away that dividend of nearly 8% on an ongoing basis. And here is the breakdown of that dividend. It's paying 32 cents. The next payday is coming up on May the 20th, so just 5 days from today. It's 8%. It's paying an annualized dividend of $1.27, which is yielding 8% based on the current stock price. But let's look at the wild card here, which is Petrobras, right? We don't know what will happen with Petrobras because the communists in Brazil are actually implementing all kinds of interesting spokes in the wheels, and they want to do all kinds of things that prevent Petrobras, for instance, from paying out dividends to shareholders as they have done in the past. Ironically, the largest shareholder of Petrobras is the state, which means if Petrobras pays a huge dividend, then the government of Brazil would actually be the largest beneficiary of that huge benefit. But they don't want the dividends to go to the ordinary shareholders. They want it to be invested back to improve the lives of Brazilian people. I understand that, and I appreciate that, because that's not a bad philosophy in theory. But at the same time, the government interference will do more harm than good, in my very humble opinion. You can buy Petrobras today. I actually hold PBR.A, which is the preferred shares, but you can buy the ordinary shares, or the ADRs, at $15.50 after it pulled back $1.13, which is almost 7% earlier today. I took the slide at 3:49 Eastern Standard Time. The PE ratio is only 5. This is the cheapest super major you can buy if you want to invest in energy. The dividend yield, well, we don't want to bank on that one, right? Because we don't know where it's going. The 52-week low and high, it's come off a low of $11.50, and now it's trading at $15.56. And the 52-week high was 18, so it's a little bit off that high. After hours today, it actually went green. So obviously, some people thought that this is a good time to actually snag themselves some PBR, and they might have added to their positions or opened a new position in Petrobras, since it pulled back 7% and it went on discount. Once again, up and down, mostly up over the past year or so. Hasn't been too bad. The price change over 1 year is 33%. So even when you take a hit of 7%, it is not too bad if you consider that that's a 1-year graph. Petrobras is the last one. Historical earnings. Once again, you can see it's erratic, right? So we don't know where it's going. Currently, it's saying 75 cents. And the next pay date is coming up soon. At consensus estimate for Q1 2024, 74 cents. It's actually doing okay. It's kind of sort of in line with the analyst expectations. The price earnings ratio is only 5. The forward PE is only 4.5. So it's very, very cheap at the price, but high risk. And people always say high risk, high reward, right? Sometimes high risk doesn't necessarily imply a high reward. It's just high risk, and then you end up catching a falling knife, right? So be careful with this one. If you want to do anything with Petrobras at all, make sure you don't put your proverbial eggs all in one basket, and maybe diversify a little bit, as I've done here, right? I'm showing you 4 sort of steady eddies, if I could put it that way, and one that's the outlier, which is sort of higher risk. The next pay date, if we can believe them, is on June the 27th. So still some ways away, about 6 weeks away from today. And based on that particular dividend and the dividend yield on a forward-looking basis, $2.90 would yield about 18%, right? So to be quite honest and to be fair, if it comes in at even half that, 9% would still be good. But don't let Petrobras hear me saying that. So as long as they're paying, 18, 20%, 15% or whatever, I'm okay to sort of tolerate this risk and the noise of having Petrobras, which is government controlled with lots of government interference, in my portfolio. So I'm not too nervous about it, even though it's a large position for me. I have many other energy stocks, as you know, because in addition to the ones I'm sharing with you now, I also have stocks like Occidental Petroleum and Devon Energy and so on. So I have quite a large energy portfolio. So I'm just showing you 5 dividend stocks here, high-paying dividend stocks, and the 5 high-yielding ones includes the wild card, Petrobras. The other 4 are a little bit more predictable, right? So guys, that's sort of a quick wrap here on 5 high-yielding dividend stocks. You may have some of these in your account. You may have some of these on your watch list. You may decide that some of them are a buy. For sure, for me, just from a very simplistic point of view, all of them are a hold. I do add to them on a regular basis because every quarter when I receive my dividend distribution, I'm actually enrolled in a DRIP, which is a dividend reinvestment program. So I automatically just buy more shares every time they pay me a dividend at whatever the price is, sort of at or around the dividend payout date. If any of them are a buy at the current price, you may want to let me know as well. We can talk about it in the comments. From my point of view right now, of the 5 that I shared with you, I think the most sort of safe, there's no such thing as safe, buy of the 5 would be Energy Transfer, maybe Alliance Resource Partners. It would be a second choice. It's coal. The world is using coal on an ever increasing basis, not a decreasing basis. And in addition to that, as I said at the start, Alliance Resource Partners, even though it's an old stodgy oil and gas coal specific company, is mining Bitcoin, right? So let me know what you think in the comments, and we can open up some conversations. I look forward to chatting with you. Enjoy. Take care. Thanks for watching. Bye-bye.